Now, there are a few different orders that you can use to execute trades in the market, and the most basic order is called an at-market order, which essentially is just when a trader wants to buy or sell at the current best market ask or bid price. So it's when you're just looking to instantly get into the market and you don't really care, it's just whatever the current market price level is, you just either want to sell or buy, or obviously just exit your position at that current market price. So if you just want to instantly buy an instrument, you will get filled at the best current ask price. And if you want to instantly sell an instrument, then you will get filled at the best current bid price. Now, if a trader wants to enter the market at a different price level to the current market price, then there are a couple of options that you can use. The first is a limit order, which is where you buy or sell at a specified price or better, that is below or above the current market price. So if you set a buy limit order, then you are setting an order to buy the instrument at a price that is lower than where the current market price is trading at. So you would set your buy limit with the intention that price is going to come down to that level where you set your limit order. It will then hopefully tag you into the trade, and then hopefully price will continue going up in the original direction. So a sell limit is obviously the exact opposite, where you place your order above the current market price. You hope that price will come up to your order, tag you in, and then reverse back down in your favor. Now, with limit orders, you should be guaranteed by your broker to be filled and executed at the exact price that you specified in your order or better. So what that means is that sometimes you can experience slippage, but it's in your favor. So let's say you have a buy limit and price comes down to your order, but it slips you a little bit so that you actually get filled at a lower price. Well, because you are buying, this actually works in your favor, right? Because you have now bought in at an even lower price, which is obviously a good thing, right? So the same for a sell limit, you can get slipped so that you're selling at an even higher price, which is ideal. Now, the other type of order is called a stop order. And a stop order is where you buy at a specified price or worse above the current market price, or you sell at a specified price or worse below the current market price. So with these orders, you are hoping that price will come up or down to your level and tag you in, but then the price will keep going in that same direction. Now, both limit and stop orders are used by traders to enter positions. Some traders will only use limit orders, some will only use stop orders, and some will use both. It can obviously depend on your strategy of how you wish to enter the market. However, whether you are already in a long or in a short position, no matter what your strategy is, you will always be using a stop order for your stop loss. So if you are in a short position, you obviously want price to go down, but in case it doesn't, and it keeps going up and it goes against you, then your stop loss is essentially a buy stop order. Because if price keeps going up against your short position, you will be stopped out with a buy stop because you need to buy back your short position from the market, right? Likewise, if you are in a long position, then you want price to keep going up. But if it doesn't and it keeps going down, then your stop loss order will be a sell stop because you need to sell back your long position to the market. Now, one of the other differences between stop and limit orders is that you can experience negative slippage on stop orders. So you will either be filled at the price level you specified or worse. So that is something just to bear in mind if you are using stop orders to enter positions, but it is just unavoidable with stop losses. And it's just the cost of doing business that you can be stopped out sometimes for a slightly worse price than you had intended. Now, with the Photon strategy, to enter the market, the majority of us will be using limit orders to enter our positions, and sometimes you might use a market order, if you need to just quickly get in at the current market price. Stop orders are not something that we typically use to enter the market, we just use them for exits. Now, if you have never really traded before, don't worry if all of these slightly different types of orders are confusing and when you need to use one and when you need to use the other. Because nowadays, brokers have made their platforms extremely simple and pretty intuitive for setting your trade orders. So you pretty much now only need to understand the different types of orders for when you are entering the market. Because for your stop loss, the broker will pretty much just call it your stop loss. So you don't need to remember if it's a buy stop or a sell stop. Your broker will just put your stop loss in there for you. And obviously you have to put the price, but it will just say stop loss. So you don't need to worry about the difference. And then likewise for your profit target, the broker literally just calls it your take profit order. So you don't need to worry about the difference between setting limits or stops or whatever when you're looking at both your stop loss and your take profit. It's just your entries that you kind of need to understand the difference. So make sure you practice with a demo account to familiarize yourself with the different types of orders and specifically to whatever brokerage platform that you use, as they all tend to have very slight and nuanced differences. So hopefully all those orders make sense. And what we're going to do is we're going to take a look at executing a trade using a execution platform called MT4, which is a very popular execution platform for trading FX. So you can download MT4 from their official website. They do now actually have a native app for Mac OS if you don't have a Windows system. For a long time they didn't actually have a native Mac app, but they do now, so you can download that here or whatever platform you're on. And obviously they also have the phone apps as well. So once you've downloaded that, what you can do is then you will have basically a piece of very horrible looking software, really old school looking software, almost like Windows 2007. But yeah, that's essentially MT4. Log in with your account down here if you haven't done so already. So whether you sign up for a demo account or a live account with whatever broker you use, you can punch that into here and you'll have something that looks like this. Now your charts might look a little bit different to this. You can obviously go in, if you right click any chart, you can go down to properties and you can start to play around and customize with the settings. But I don't want to focus on that for now. This is purely just about focusing on trade execution. So you'll have your pairs over here as well. Kind of if you want to load those up, you can just drag and drop any pair into the window and it will populate that pair. Of course, you can flick through the timeframes up here, right? And you've got your bid price, you've got your ask price. The spreads are very, very tight on this raw spread demo account. So this shows the spreads here. So see here where it says 1 or 3, that's micro pips, that's not actually pips. So if it says 2, that's a spread of 0.2 pips, okay? And you can see that between the difference between the bid and the ask price there. And that's pretty much it. This is where you'll log into your account, and then you have your trades will be shown down here. And your account balance and history, and if you go into that tab there, if you want to see your prior trade. So let's imagine you've been on TradingView, right? You've sized up the trade that you want to get in, and then you have gone on your position calculator and you've put in there your stop loss size, your account size, right, etc. And you know your lot size, and now you are ready to enter the market. So let's say that we wanted to get long somewhere down here. We've already sized it up on TradingView. What you can either do is go up to here and click a new order, or you can just right click the chart here and go down to trading here, and then you can click new order there, or you can press F9 to pull up this window. So euro dollar, that's obviously the pair that we want to trade. You can put in your lot size here. So hopefully you should have done that in the position size calculator already. So let's say that we want to use 10 lots. Now if you just click sell or buy, that obviously just put you into the market at the current price. You will buy at the ask or you will sell at the bid, okay, and then you'll be instantly in the market. So yeah, if you do want a stop loss, obviously put that in here as well, what price level you want that stop to be, and then if you want to do a take profit as well, but you can do that once you're in a trade. But I'd recommend if you're entering at market, probably try and put a stop loss in there just in case the market moves against you pretty quickly. But what we're going to look at is pending orders. So remember, for pending orders, there's generally two types. There's either a limit order or a stop order. So generally with the Photon strategy, as you'll learn as we go through the technical analysis lessons, is that we mainly use limit orders. So this is where if you're buying, price will be higher than the level at which you want to buy at. So for instance, we'll put in our buy limit, right? Because remember, we want to buy somewhere down here, right? And then we can put in the price at which we want to buy at. So let's say we want to buy at 1598. So 1.1598. Now this, you can put an expiry for when the order will be cancelled, but I don't typically tend to use that. And then once you've put in your entry order, then you can put in your stop loss. So let's give it 1.1594, so we can give it a 4 pip stop loss, and we'll leave the take profit empty for now. And then you would click place order, and then that successfully tells you that your order has gone through, so you can just click OK. So here you can see, if you just open up the euro dollar chart, we now have a buy limit down here. So what we would be hoping was going to happen is price is going to come down, tag us into the trade, ideally not hit our stop loss, right, and then continue up in our favor. So if you kind of hover your mouse over the stop loss, it will show you what you're risking. So you're risking 4 pips. Remember, it says 40, but that's essentially points. So if you see 40, just divide it by 10, and that is 4 pips. And that's your risk with 10 lots over 4 pips. That is a $400 risk, okay, on euro dollar. So what you can do from here is you can drag and move your stop loss like that. you will need to accept the conditions for one-click trading. Okay, if this pops up, if you haven't done that before, that window will only come up once, and then you can obviously drag and change it. But just remember that when you do that, and you do that right, you are not changing the lot size of your trade. See down here it says your lot size that you have active. That will not change. All you're changing is where your stop loss is. So if your lot size is staying the same, remember, and then you make your stop loss bigger, that means you're going to have more dollar risk, right? So maybe you only intended to risk $400, but if you make your stop loss wider, you're now risking 520, as you can see, right, with a 5.2 pip stop loss. So if you do want to make your stop loss bigger, then what I would recommend you do is you actually close the trade here. So you can click the X button there, and that will delete the trade. And then you'd want to basically start from scratch and put in your new lot size that you would need, a smaller lot size for that larger stop loss. Okay, so that's just something to bear in mind if you do make your stop loss bigger. And of course you can make it smaller as well, and that will reduce your risk, and you can eventually move it to break even, right? If you're in the trade, you would move it up to your break even level. Sorry, it's moving around, right? And that would break even your trade. So then again, let's say you're in the trade and you want to add in a take profit. You can just double click on the trade, and this is where you can modify the trade. So you could add in a take profit, let's say 1.1610, and then you would just click modify. And then up here, this is your take profit order, right? So if you were tagged in the trade and you were running the trade, if it comes up to here, that will take you out the trade, and you can see for a $1,200 profit. And that's pretty much how we use limit orders. Along with stop loss, you can see how it just calls it your take profit, right? TP, stop loss, stop loss. You don't need to worry about what types of orders they are. It's just for your entry order where you need to understand the difference between market, limit, and stop orders, okay? And yeah, now if you want to do kind of partial profits, the way you can do that once you're in the trade, in fact what I'll show you is, let's get into a trade, and what we'll do is an at market trade just to get into position. So you can either, like I said, go into trading, right click and do a new order, or click the new order button up there, or press F9, right, to pull up your order window. Now if you just wanted to enter at market, you can click buy or sell here, or what you can also do, which is a little bit quicker, is if you turn on one-click trading, which is here, right? So you can press Alt-T or click this window here. You'll get a little pop-up up here, and this essentially is where you can quickly buy or enter at the market. But you obviously need to put in your lot size up here. So let's say we want to get in at 10 lots, and let's just say we wanted to instantly get long at the ask price, then we would click buy, okay? And as you can see, we're now live in the market, and we are running a little bit of profit, but we are actually net down because of the commission, okay? So you can see the trade is running in $40 profit, but the commission to enter the trade costs $70, so we are net $20 down, right? That's us in the trade, but remember, you don't have any stop loss on at the moment, so you quickly want to go in there, and you would want to modify the order, and you want to put your stop loss. You can either do that and type in the price, or maybe you want like a 5 pip stop loss, then you would put in, that's 50 points, then you would click copy, that would put that in there, which would be 5 pips away from the current price level. And now you have that 5 pip stop loss, okay? Shows you your risk there. It's done at about 4.8 pips from where you've entered. And then you can obviously, if you want exactly 5 pips, right, you can drag that down. Let's see. Yeah, now you've got a bang on 5 pip stop loss in there. And now you are in the trade, okay? Now, if you want to do partial profits, what you can do is you can double click to open up the trade window again. And then what you would do is you would click into here where it says modify order. And if you go to market execution, right, now you're in the trade, what you can do is if you want to close out a partial amount of the volume, so it's a 10 lot trade, let's say, for whatever reason we want to close 20% of the volume, this is where you would go in and you put in the amount of lots that you want to close out. So 20% of 10 lots would be 2 lots, and then you click close, right, and that will close out 20% of the volume of your trade. So now you only have 8 lots running. So you'll obviously understand why we'll do this as we get later on into the management side of things when we look at that, but that's just so you can understand kind of the basic way in which you can manually partial out your trades. So then if you go into account history, here you can see those trades that we have executed. So we had that buy limit order initially, but we cancelled it, right? So that's why nothing then happened. And then this is showing that 2 lots that we just closed, where it was for a $6 profit, right? So then we go back to the trade, and this is what your remaining trade volume is on here. Yeah, and that's how you're in the trade. And that's pretty much kind of everything I want to cover from a very basic market, very basic trade execution point of view using MT4. There are plugins that you can download, scripts that will kind of help you do a few more advanced features, especially with splitting out your trades into multiple trades, so you can have sort of more advanced partialing techniques. But again, we'll talk about this at a much later date in the course, but I will link those below in the notes below the video. Another thing I'd add as well is, MT4 is not the only trade execution platform. There are some other platforms that are a lot more modern. such as CTrader, and a lot of their own brokers have their own sort of pretty decent web platforms as well, which you can check out. But this is just kind of quite a bog industry standard that a lot of people use. So yeah, I just thought, for the sake of a tutorial, this would be the easiest platform to show how you can enter, modify, and exit trade. So let's just say we wanted to exit this position, right? You can obviously just manually click there as well, and then boom, you're out of the trade. Okay. So that pretty much wraps up MT4. As always, if you have any questions, please feel free to drop them in the comments below, or hit us up in the community.